All right, Evan, welcome back for another episode of This Week in Charts via Carnival Trades and Wall Street from Main Street. If you guys not done so already, don't forget to give the video a thumbs up, like, comment, subscribe to the channel. You can find Jason on Patreon, and you can find me on carnivaltrades.com for swing trading alerts, analysis, and live day trading. Anyways, we had a very eventful week this past week here as market had another dip, and this was the most sustained amount of downside that the market's had really since the April lows. And by sustained downside, I mean we've had pretty good dips, at least fast and furious ones, obviously, but this one a bit slower. But you got 1, 2, 3, 4, 5, 6, 7, 8 days essentially without a follow through rally attempt yet. Now that may happen on Monday, but for right now, we're still looking for the market to put together a consecutive up days. I mean, we had technically consecutive up days here, but I mean it was basically a flat day. But we're looking for that market here to try and break this little downslide here. So most sustained downside we've had in a while, and for the first time since the April low, really, or even since right here, you could argue, the bears now have actually a little bit of room to work with in terms of potentially making a lower high. And you can see here, obviously, essentially a flat day on Monday. We gapped through that master trend line, essentially tagged it intraday. If we go to like an hourly chart, it's not lined up perfectly, but you can you get the idea. It got very close. I think actually I got my after hours. Let me see if that fixes it. Yeah, there it goes. So you can see it's a little bit closer there. So it's respecting, and they rejected, and we backed off. Now Friday, if you'll recall, last week, really the last 2 weeks, ever since that breakout day, I've been saying on any sort of downdraft, you want to see the bulls hold 6,700 on the cash S&P, and they did that by the close. And they were able to reclaim yesterday's low, or I should say Thursday's low. I'm doing this video on the weekend. But they're able to reclaim the prior low of the day. So I'd give the bulls the bias here into Monday unless something changes, headlines and things of that nature, which we have a few that we'll discuss. But right now we held the 50 MA, we held the 6,700 area, so we'll give the bulls the bias here. But there is now room, again, for a lower high for the first time in a while. Perhaps we could go up there and tag that trend line. Resistance is this week. If we just go to an intraday look, we'll see, we'll just take a fib tool here and just draw it down. We're not that far off of 67.50, but I would say your majors here are going to be, 67.75 and, 6,800 to 6,810. So those will be levels to watch, at least in the short term, for this week. Now, ironically, we definitely had financially, obviously, we've been watching, the tightness here in the, repo markets. SOFR did come in pretty sharply. So, and this is something that I said, like, they're not going to take long to plug this up. Right? They're not going to let this get systemic here. But, it's interesting, the market kind of pulling back nonetheless. This week, you can see SOFR versus effective Fed funds coming back down. So obviously, something was done. And I think the Fed did actually, I think there was it was 50 billion last Friday. So something did get done there to fix that. But ironically, we had a little bit of selling. You can take a look here. And by the way, if I told you right now that Meta has given back 50%, more than 50% of its April rally, would you believe me? Because it's done that, and it did that this week, hitting the 618 and the 600 handle. This is probably good for a bounce here, but I'm bringing this up here because AI names got hit pretty good this week. Microsoft, even Nvidia was down, got saved on Friday with that, had a rough week. AMD pulling back. Oracle has done nothing but sell since the highs. Palantir bounced on Friday, but, gap up Monday and then reporting earnings, and it's done nothing but sell since then. So we're seeing these AI names, little profit taking going on. Palantir's earnings report was amazing, but investors are selling here. This CapEx is, they're spending a lot of money, and I think the market is starting to realize, hey, we need to, some of this stuff is going to take a while to pay out. The amount of corporate bond issuance that they're issuing out is enormous, specifically Oracle. But it kind of reminds me a little bit of what Meta. I'm on a much smaller scale, but remember what happened to Meta in 2022. their bottom line was taking a hit because all of that capex to go into the metaverse, right? And eventually it worked out, but it took a long time for them to really start making money. So you kind of getting the sense here that investors say, hey, like these multiples are really high. Maybe we should take some profits here. So we are seeing AI lead to the downside just a little bit. So that's kind of an ironic situation here. As the financial conditions get better here, you can see XLF held up this week. So did KRE. HYG was weak in the beginning of the week, but it did bounce. So we'll see if that continues. But from a financial standpoint, the market seems to be stabilizing, but we are seeing profit taking nonetheless. Now, about some other headlines here. This will be interesting. Let's flip back over here. You can see Bitcoin upticking right now. So is Ethereum and alts. I bring this up here because I'm very interested to see where we open at 6 p.m. tonight. I'm doing this on Sunday, and the reason for that is we had a few headlines here. Yesterday, Trump and Bill Pulte, who, I mean, if you're aware who he is, this is basically like the equivalent of having a Goldman Sachs guy as the Treasury Secretary. But anyway, so basically Trump is looking for the 50-year bond, 50-year mortgage. And it's going to, lower payments by like $300 a month, which, I mean, if you can't afford $2,400, you can't afford $2,100. So, I mean, it's just kind of a foolish proposition. But people are getting this half right in the criticism. And, I obviously joked about it here, but even for the banks, they will need guarantee, and I'm sure they would get them, but they will need guarantees because if you just do the math, I mean, they would need 17% more mortgages, more mortgage buyers to make up for the $300 a month less return on capital per year for the $300,000 or whatever that they're shelling out. And I mean, like, not for nothing, but how old's Jamie Dimon? 65 years old or something like that. He's not going to live to see that end of that term. And another 20 years, there could be a recession. There could be, the buyer could die, the natural disaster. There's a lot of risk. So this isn't a slam dunk for banks unless there's guarantees. And they'd probably need to extend home buyer, sweeten the FHA. It's just a mess, right? It's laughable that anybody thinks this is like a good idea. And speaking of great ideas, let's run it back, guys. Let's do it. We're not gonna call it stimulus. We're gonna call it a tariff dividend, even though it's the same exact thing. And we're just gonna hope that we don't have inflation again like we did in 2021, because the guy says he wants rates down. Oh, and by the way, this is all because they want to lower the national debt, right? Get more mortgage buyers. Well, if you're going to have to guarantee those loans for the banks, which means the government's going to have to spend money geez, math, right? But yeah, so this is not going to help the long end of the curve, and I think it's just absolutely, it's mind-boggling. It's really, I can't think of a word to describe it. So, but yeah, Bitcoin's rallying, so, liquidity, I guess, and we'll see if that ends up being the case. I don't know what to tell you guys. From a technical standpoint, again, 67 still the level on the S&P. QQQ did hold 600, so that held up right there. Excuse me. And IWM on the week up 0.5% Friday. That actually led the rally Friday. And it did hold, still above the weekly 20. And by the end of the session, it did reclaim that breakup bar there, that wide range candle. So I do like that. Dow, same thing, holding the 50 MA just like the rest of the markets. Again, SMH got hit pretty good, but had a good rebound where it needed to. IGV got hit pretty good as well. A lot of that Oracle related, but I don't like this. This failed that. So you have a failed bull flag here at all-time highs. So I would say cloud is weak here. What is not weak right now is transports, ironically. Again, so AI selling and transports bidding, so maybe some rotation. Reclaiming those trend lines on a weekly close, and it closed Friday right at the highs of the week. So good move there for the transports. That's a positive. Another sector, and by the way, I'm just going to start touching on this now. It's a little early. It's November, but in December, towards the end of this month here, there's a lot of things that got beaten down this year in favor of AI names. I'm personally watching Staples, and there was not this company like the ETF, Consumer Staples, XLP. Um, there was a poll. I don't have it right now, but it was Barron's polled like a bunch of money managers, and Consumer Staples was voted the least attractive. And the reason I'm bringing this up here is because with how weak they've performed this year relative to other things, you're probably going to see some tax loss harvesting, which I think makes this sector the January effect play. So I'll be keeping a watch on this. A lot of healthcare names too. Obviously, XLV has come off the lows, but there's still a lot of losers that haven't gotten any love. I mean, full disclosure, I have some NVO, and they've got the short end of the stick. I mean, Lilly's really done well here, but I mean, this is a company that makes 86 billion in revenue a year, and it's trading like they're broke. But nonetheless, just throwing out these ideas here. Watch for those January effect plays. I love this time of the year for that reason specifically. But nonetheless, here we'll flip over to, I'll just cover TLT really quick. Again, long end of the curve down. Again, the Fed cut back here and rates have gone up. It's just not good. XHB, again, a little rebound here. It held the 200. I still think this needs a little bit more time. This could be a sector that could rally if it can get going, but I need to see this firm up a little bit more on the weekly. I don't like that red bar there. IYR, again, this has been all over the map, but it did rebound nicely on Friday, and it's holding this 94 handle. We talked a little bit about fins, kind of a sideways to up week, so they have rebounded a little bit. Blackstone earnings on Monday. I'll be very interested to see how that works out. There's a lot of bad auto loans there. We talked about KRE, broker dealers rebounding on Friday. Oil has not gotten going here. It's still holding this trend line here. It's got a little bit of a decision to make. I still think this can go higher. And the reason for that is if you look at oil equities, we're seeing money rotate here. XLE up 1.5%. Look at the last 3 days versus the price of crude, right? So producers leading the commodity is usually a good sign. XOP breaking out of this falling wedge here. And OIH, my favorite. Oil services, just flagging here on the daily. If this 20 MA catches up and this is still sideways, I think that can be rocket fuel. Dollar index did back off after hitting the 200, which we kind of figured would happen. There is room for a higher low here, though. So I still think too many shorts are in this. If it can break through 100, it has some more legs. Gold did not get, it was kind of a sideways, kind of flat week. This should try to rebound to 41, 4200 here this week unless something changes. I still think gold in the kind of like medium term needs to tighten up kind of like what it did here. And if you look back, it's done this a few times after these big rallies. So I think, it's probably a decent time to add if you want to for a longer term play, but I think it just has more, it needs to consolidate for more time. Same thing with silver, but ironically last week silver was actually stronger than gold. So if it can break through this 49 area, it's got some more legs to retrace, maybe up to 51, 51.50. Platinum, a little less firm. So I don't have as good of a read there. Same thing with palladium. Then we have copper here, kind of sideways on the, well, actually it was down on the week, but sideways into the end of the week. And that's been hovering around $5. Weekly chart, kind of messy, but trend is still up. We mentioned Bitcoin a minute ago, but just to cover here, it had a pretty good washout, but nice rebound. And, if it can clear 106, we can try to work our way back up these levels. It didn't quite get to, I had a buy order open at 97. It didn't get there. If this does roll over, though, we could be looking at a good pierce of this trend line here, which I think would be attractive. I did get filled on Ethereum at 32.20 on this little slice here, and that has rebounded. That has to clear 36 though. Otherwise, we could be looking at, 27, 28. But good rebound here so far. Solana bouncing as well. And we'll see if that's liquidity related. I'm very interested to see where ES opens in the overnight. But again, right now for the overall market, again, 6,700 on the cash. It's a big level for the bulls to hold this week. So anyway, with that said, I'll wrap it up here. Again, you guys take care. Have a good one. Come find Jason on Patreon. You can find me on carnivoretrades.com, and we'll see you guys all next week.